So very good evening to everybody. I think it's 6:15 and we'll start. Respected Chairman of IDT Committee, C.A. Sunil Gabawala ji, Mandar Telang, Joint Secretary for Bombay Chartered Accountant Society, Managing Committee Member C.A. Dushyant Bhatt, and our respected faculty for the day, Senior Advocate V. Raghuraman. Friends, good evening and a very well welcome to all of you for the today's lecture meeting on the important judgments in indirect taxes in the year 2023-24. I'm very delighted to be a listener for such a topic that is both intricate and essential for our understanding of the legal and economic landscapes. Indirect taxes comprising GST, custom duties, excise, service taxes play a very pivotal role in shaping the financial framework of our economy today. These taxes levied on goods and services not only serve a significant source of revenue for the government, but also impacts the pricing, supply chain, and overall business environment. It has been 7 years from the implementation of GST in India, as we all know what important role it plays for government in terms of collections. The gross GST collection hit a record high in April 2024 at a 2.10 lakh crore, representing a significant 12% year-on-year growth, driving a strong increase in domestic transaction by 13% and imports by 8%. Honorable Finance Minister attributed this surge to strong momentum in the economy and efficient tax collections. We professionals in practice and industry both would know that this year was the year of show cause notices and assessments. The due dates for completion of assessments was extended by government twice. So I'm not from completely a GST field, but I was told that this extension has been challenged before several high courts. And in few cases, court has granted a stay, especially for assessment year 2018 and 19. Wherever matter is adjudicated under Section 73 of the GST Act and matter is in appeal. Lot of SSEs have directly approached High Court on various matters, including for high-pitched assessments and violation of national justice principle and all of those. Who is the proper officer is still a mystery in many cases. All of those things are pouring around. The judiciary has consistently played a crucial role in interpreting the complexities of taxes, ensuring that they apply fair and just. Through their judgment, courts have clarified ambiguities, upheld constitutional principles, and balanced the interest of state and taxpayers. Each ruling adds a new dimension to our understandings and provides precedents that guides our future actions and policies. As a professional, scholars, or students in this field, it is imperative for us to be abreast of such landmark judgments that has defined and redefined the principles governing the indirect taxes. In today's lecture meeting, I am sure our learned faculty will delve into some of the most significant judgments during the year in the realm of indirect taxes. These cases will not only be highlighting the legal intricacies, but also reflecting the evolving nature of our tax systems in response to changing economic realities and policy imperatives. Understanding this judgment is not merely an academic exercise. It is very crucial for practical applications for all of us. So with this, what I would encourage all of you to actively participate, pose questions, and share your perspective. It is through such discourse that we all enrich our collective knowledge and contribute to a more robust understanding of indirect taxes and their judgments. There are many participants who are not members of BCAs from various parts of the country today. People are pouring in. We have more than 700 plus registrations. But I would definitely like to introduce the non-members about our society, the Bombay Chartered Accountant Society. It's the India's largest and oldest voluntary body of professional chartered accountants. Membership exceeding 10,000 plus 500 individuals, and it has widespread presence in across 350 cities and towns of India. BCS is unwavering in commitments toward development of the profession since 1949 and is just completing its 75th year of existence. Its core mission is to provide its member with extensive opportunity for growth and advancement through a multifaceted approach encompassing learning events, lecture meetings, research publications, advocacies, networking, and various other community initiatives. By operating as a not-for-profit organization, BCS relies on dedicated efforts of hundreds of volunteers who selflessly contribute their time and expertise while upholding shared values and professional ethics. BCS has been a pioneer thought leader, enabling community to continuously plays a pivotal role in strengthening the accounting, tax, and finance economic fabric of India. BCS also has a track record in its publication, prominently showcased by its journal, which is the BCHA, a sought after monthly periodical with over more than 5 decades of publication. BCS has a comprehensive approach to professional development combined with its community focused initiatives, enabling a more robust and sustainable future. Thank you all for your presence and participation today, and let us all explore the pivotal judgments that have shaped the field of indirect taxes. Thank you all, and I will hand over to Sunil Bhai for his. Sunil Bhai, you are on mute.
Sunil Bhai, you are on.
Thank you, Chirag, President of the Society, Mandar Secretary, Senior Advocate V. Raghuraman ji, my dear friend and the senior faculty for today, and Dushyant Bhatt, Managing Committee Member and the Convener of the Indirect Tax Committee. It's my pleasure to welcome all the participants for this interesting session on the important judgments under indirect taxes. Friends, when we talk about GST, we all understand that it has been a grand marriage of various indirect taxes. And there's a proverb which talks about a 7-year itch in a marriage. And it's no coincidence that we are just going to complete 7 years of implementation of GST. And I'm sure as practitioners, I could see a lot of attendees who are, friends and seasoned practitioners also. And all of us have seen how the last 1 or 2 years have been in terms of ground level implementation. The president did talk about a few of those aspects in his opening remarks. And all of us have seen have faced the brunt of this entire, barrage of notices, letters, and high-handed action at the ground level. Despite many places there being circulars, clarifications, most of them being followed rather by aberration rather than by, in terms of letter and spirit. And I think in this, and that's where I think a lecture meeting like this would be very interesting to look at how, and even in the wider space of indirect taxes. Friends, in this today's
We lost Sunil, right?
Yeah.
Yes, yeah.
He will rejoin.
We can wait for 20 seconds or else we can go with introduction. Dushyant Bhai, you can start with the introduction.
Yeah.
Sunil Bhai.
Yeah. Thanks.
I think he's here.
Yeah, he has come.
I think you can go ahead.
Yeah. So thank you, Chirag Bhai. Good evening, all. Thanks for the pleasant task of introducing today's faculty, Shri V. Raghuraman sir. Raghuraman sir from Bangalore is a senior advocate, chartered accountant and cost accountant, having secured top ranks in almost all exams. He has an experience of more than 30 years and he specializes in GST, excise, customs, service tax, FTP and FEMA. He has also specialized in indirect tax planning and litigation, and he frequently appears before the courts. He is visiting faculty in CA Institute and IIM Bangalore. He has addressed large number of seminars and published several papers in national magazines on GST, excise, customs, service tax, FEMA. He was also a member of the Indirect Tax Committee of the ICI New Delhi during 14-15. Sir has authored books, namely Landmark International VAT Decisions and Its Relevance to Indian GST, published by International Publishing House Walters Kluwer. The another book is, at his credit, is GST and Indirect Taxes Principles Demystified, published by International Publishing House CCH. With this brief introduction, I welcome Sir on behalf of BCS and all of us present in this meeting and request Sir to take the charge for sharing his expert analysis and views on important judgments in indirect taxes. Sir, over to you. Thanks.
You think
If
Mr.
I-
Sunil should finish his speech? It got it got cut. Thank you so
There is
much.
some connectivity
There-
issue. Yeah.
Yes, there is some connectivity issues that I think at this end, but I thank the BCA, Chirag ji, Dushyant ji, Mandar ji, Sunil ji, and all of those who formed the committee for inviting me to share my thoughts on what I felt were important judgments in indirect taxes in 23-24. I may not be able to cover all of them, but I will try to cover them in the spectrum of topics which I would like to select. More important is fact that we have a spate of litigation in GST and it is flooding the country. The spate of notices that have been issued, especially in September, are so much that we are still arguing those petitions on admissions even today. With the GST 80 going to come shortly, maybe in the next 6 months or 1 year, be functional. One has to see how much of these kind of notices will be entertained by the high courts. They have been kind enough now to be entertaining. Most of the high courts are in fact entertaining because they know that there is no sufficient adjudicatory mechanisms which are present in the GST regime even after so many years of its implementation. It's a sad state of affairs. We should have a judicial body which will go into the nitty gritties of the law because today we are only going on uh, natural justice, cancellation of registrations. And I can't understand why so many registrations are getting cancelled, especially in the Delhi region where we find a lot of decisions of the Delhi High Court. Almost on a daily basis, you find a minimum of 3 or 4 such decisions on cancellation of registrations. I'm finding this to be uh, rather quixotic because you cancel the man's registration, you may hurt his interests now, but you are unlikely to recover the revenue if you insist on this kind of a cancellation. And it's fairly easy to be re-registered again. I think this is a spate of litigation that is happening in GST is not good for the trade. The reason being, you cannot at the initial stages of a new law have so much of litigation on matters which seem to be frivolous, which seem to give a lack of understanding on the part of the department, especially where I find there is a distinct problem is this. The state officials in each of the state government, under the state governments, are unable to understand the intricacies of the GST legislation. Therefore, I find a spate of litigation being made by the state authorities. And to top it all, we have the central authorities also giving parallel notices. This is what we foresaw. We foresaw that there will be parallel litigation happening. And that is exactly what is happening today, where the assessees, I have matters where the assessees faced for the same year, same issue, 3 notices. One from central authorities, one from state authorities, and one from DGGI. This cannot continue. If this continues, it will be a serious issue on the implementation of the law itself. It's not that we're cribbing, we are saying that you can't run the law in this manner. So, with this introduction, let us go into some of the judgments I will take up. One of the issues which is dear to my heart and which I want to see go through is input tax credit, where there will be very less litigation in this. I am not seeing that happening. Ever since moderate credit was introduced in the year 1986, I can tell you in the early 90s, we had so much of litigation in this gate pass system and then the invoice system which was introduced. It was tremendous. Now, that same amount of litigation I'm seeing now in GST. If you look at the input tax credit litigation, it was tremendous in the earlier years, and after 2000 it came down. It came down and then went up again. Now I am seeing that this GST legislation, the input tax credit scheme, is again under litigation. And that is a major lack of understanding between the assessees on one side, advocates and chartered accountants with the assessees. These are all one side, and the department on the other side. It's high time the government address this issue whether input tax credit is fundamental to GST or is not fundamental to GST. We are tired of arguing these matters. I remember I had to spend around half an hour to 40 minutes, of which I spent a good amount of time explaining in the Supreme Court in the Safari case why input tax credit is fundamental to GST or a VAT system. Please understand, when I had to tell them that in the UK, they introduced the VAT system that you see, which has developed over the years, in 1967. The directives came in 1970. That's 50 years before we thought of introducing GST. A whole lot of literature is available where the courts, the European courts, specifically say input tax credit is indispensable for a functioning of the GST system, of a VAT system. So I had to tell the court, and I remember telling the court, please ask the government to show me one country where there is no input tax credit system. Even Japan, which doesn't follow the invoice based system, is thinking of introducing it and gives a deduction for purchases before they calculate the value add. There is no country without the input tax credit system. How can a government which has introduced this system say that it is only a legislative concession? It is not. Can you envisage a VAT system without input tax credit? You can't. If you cannot, then why do you fight about input tax credit? This is the most unfortunate litigation that is happening in this country on input tax credit. With this, I've addressed this on many occasions. Now, you take a simple issue which has seen so much of litigation across the country. We have cases across all the high courts where the supplier's invoice is not reflected at the 2A or 2B, as the case may be. It doesn't get reflected. I take the credit and I find that the supplier's end, he has not uploaded his invoices. Now, whose fault it is? Now, you have these kind of issues where a person who purchases and who has paid the taxes struggling for credit. Why? Somebody else has not uploaded his invoices. Some of them have not paid their taxes. I have paid the taxes to my supplier. He has not remitted it. Now, what is the mechanism? The GST Act is what we should see. We cannot, approach these problems thinking of, in a moralistic view. Oh, he has not paid tax, so you are not entitled for credit. No, that is not the system. System is not that. If I have paid the taxes, I'm entitled for credit because I've paid the taxes. If he has not remitted the taxes to you, you have mechanisms to recover it. Otherwise, you please introduce a recovery mechanism in the GST system, and I'll tell you why they will never do it. They will never do it because they know if they have that, the onus is on them to restore the credit back to me. Let me give you an example. Let us assume I've paid the supplier and the supplier doesn't pay the taxes. Now you have recovered it from me because of your 16, 2A, 2AA, 2B, 2C, all that. 2AA and 2C. Several seminars have told you that these are untenable provisions in law. Unless the supplier and the recipient both are hand in glove in any fraud. Other than that, it's not possible. So if you look at it, if I paid the taxes, you have recovered from me. You recover from the supplier also. You get a double recovery of taxes. And that is not allowed in any input tax credit system. That is not allowed in any VAT system. That is the reason why you have a mechanism for recovery of the tax not paid at the supplier's end itself. You have so much. 73 is there, 74 is there, 78 is there, 79 is there. You have so many. The provisions of law are many at the supplier's. You can't, because you can't enforce it there, you can't come to me and ask me to reverse the credit. That will amount to double recovery. And it will get rid of the recovery mechanisms itself at the suppliers. This was very well understood by the Calcutta High Court. Repeatedly, you see the division bench of the Calcutta High Court as a very experienced judge in taxation, clearly stating in so many words, you can't do this. And exactly, if you see Suncraft Energy's case, if you see that SLP against Suncraft's case was dismissed by the Supreme Court, and rightly so. Rightly so. This, what did the Calcutta High Court say? And this should be the law. You must and should proceed against the seller first before you go to the buyer. Unless you see that these two are hand in glove, there's no question of going and recovering it from the recipient. This is the ratio which I find should be adopted across the country. Fortunately, it is not happening. We have seen the Patna High Court, for example, stating that if you're not paid taxes, credit cannot be given. You have Allahabad High Court and GST saying it, and all of this emanates from a VAT decision which was passed by the Supreme Court, state of Karnataka versus Ecom Giri. It comes from the state where I argue matters. That was a completely different case. And with all due respects, I would say wrongly decided. You look at it this way. What did the Supreme Court say there? They said the burden of proving correctness of credit is on the person who claims the credit. They're right. You find those provisions in section 155 of the GST Act today. See, GST Act says that the burden of proving is on the person who avails the credit. No doubt, it is only a proof or it is only a rule of evidence. It's the rule of evidence. If you have the e-way bill and the invoice, in my opinion, it is sufficient. But the Supreme Court went a step further and said, you must prove the name of the selling dealer, details of the vehicle, what delivery challans were there, how much freight was paid. These, if I have to produce these details for each and every purchase, just imagine the amount of paperwork that I have to do. That is why you have something called an e-way bill. Now, burden of proof may be on me. There is a difference between burden of proof and onus of proof in evidence and law. Well, the burden is always on me. I can shift the onus. How do I shift the onus? My initial burden is to prove the transaction is genuine. That I prove because you have an e-way bill system and an invoice system and bank accounts. These three, in my opinion, are sufficient to shift the burden to the department. Now, the department in turn can shift it to me by, for example, by saying that the e-way bill, the vehicle number is of a scooter and not a lorry. If they can prove that, then yes. Otherwise, my transaction is genuine. I can't be expected in each and every transaction to give all the details to the department. So the department doesn't prove anything. That is not burden of proof. That is burden. And that's unjustified burden. So therefore, this decision of the Supreme Court, which Ecom Gill trading, which put too much of a burden on the assessee, has to be reversed in the near future so that the burden gets shifted depending on the weight and volume of evidences that have to be led between the parties. It can't be a one-way street where the assessee has to prove everything and has to disprove his own transaction. I can't understand this. But anyway, this is the law of the land as far as VAT is concerned. And many of in Karnataka, we had this e-Sugam, which was somewhat similar to the e-way bill. In my opinion, prima facie evidence should be first started. E-way bill, invoice, bank statements. If you find the e-way bills non-genuine, then yes, the burden will shift back to me. So I believe that the Calcutta High Court's decision should be preferred over the Allahabad and the Patna High Court decisions on how much of evidence should be led. And even the Ecom Gill decision should be subjected to some review so that it doesn't pose an unjustified burden on the assessee to prove everything. There's another type of input tax credit denials that happens. How does this? You just look at it. Registration is cancelled retrospectively. If you cancel the registration retrospectively, does it mean, therefore, that the transactions that have taken place in the past 2 or 3 years are all fake? The Division Bench of Calcutta High Court, again in Shraddha Overseas, specifically dealt with this, saying if you say that the dealer is non existing, he doesn't have a valid registration, or he's a fake dealer, let us say, you must prove that the transactions are fake. It's not enough to cancel his registration retrospectively. You have to, if the taxes have been remitted to the government, there's no question of denial of input tax credit. Again, the Calcutta High Court hit that right. You can't cancel underlying transactions retrospectively. The third aspect, blocking of credit. This was rampant a few years back. It still continues in many jurisdictions. But there is one decision of the Bombay High Court which says before you block credit, you need not give him a hearing. But after blocking, post blocking, you can comply with the principles of natural justice, like was done in Maneka Gandhi's case. Now, we had a similar matter in Karnataka High Court, where the division bench had appointed me as the amicus curiae to assist the bench because they felt they were not able to follow the Bombay High Court's judgment. And several months back, I had told the division bench and I had assisted them to say that After Maneka Gandhi's case, there are so many other cases which have come. Lot of water has flown under the bridge, wherein the Supreme Court in several cases, Sahara India firms case in the income tax regime, CB Gautam's case, has held that prior hearing is very important. The rule is prior hearing, exception is post hearing. So we had taken out all those decisions and shown that just before the vacation, the Karnataka High Court pronounced its judgment saying that the division bench pronounced saying that the appeal has been allowed, which means they have probably, the order is yet to come, but they have probably uh, agreed with the submissions that I have made. We have to still wait for the order, but it appears that they may have agreed with that, and also made another point that before the officer exercises such a draconian power of blocking somebody's input tax credit ledger, he must do some, he must have some material and his own inquiry. In most of the blocking cases, what happens is you take an example, and these examples are across the country. An officer sitting in Bombay will get a report from Goa saying that so and so is a fake dealer because he would have visited his premises in 2024 and not found him there. So he will say, though he is registered from 2017 or 18, as the case may be, since I have not found him in 2024, all the last 6 years, all his documents are fake. Right? This is a preposterous way of running the law. Based on that report, person sitting in Bombay will block the electronic credit ledger if you happen to have purchased even genuinely from those people. This is happening across the country. So I had argued saying that the person in Bombay must have material in his possession and he must also apply his mind to the material. Not enough if somebody sends some report. I must see whether when I block excess credit ledger, I must ensure that the transactions there, the exchequer has suffered. What is that material you have? What effort have you in Bombay put in to say that those transactions are genuine or not genuine? Without that exercise, blocking the input electronic credit ledger would become a draconian exercise of administrative power, not envisaged by any rule. These were the submissions I had made. I hope that both these submissions are, we have to wait for the order, of course, but I hope both these submissions, if these submissions are accepted, then we can see at least in Karnataka, and if other high courts accept this, that there will be a hearing before the electronic credit ledger is blocked. I hope this is the law. We'll have to wait and see. The other one which is worrying me is this provisions of section 16(4) casting a limitation on taking the input tax credit. As I've said in various forums, and I'm about to argue this matter in the Karnataka High Court. We have bunched it up, all the petitions. Several high courts have already held that such a time limit there's nothing wrong with it. Patna High Court, Govinda Constructions. Then you had the Andhra Pradesh High Court in Tirumalakonda Plywood's case, where they said that it is constitutionally valid. Then you had even the Calcutta High Court mention this, they followed Govinda Constructions. The Chhattisgarh High Court, Jain brothers, they also held that this is constitutionally valid. So when we argue this matter before the Karnataka High Court, or any other high court for that matter. We have 4 high court decisions which are against us. So that makes the task very, very difficult, because if a high court upholds the constitutional validity, in the absence of a contrary judgment in your jurisdiction, all those high court judgments will apply. And I personally believe that up to 1/1/2021, when actually Rule 61 was amended, Rule 60 was amended, the GSTR 3B became a return, the only return, only from 1/1/2021. Prior to that, initially you had only GSTR 3. And GSTR 3B was only a reconciliation, a like return. It's not actually a return. Nevertheless, the Supreme Court in Bharti Airtel and AAP had said that it is a return. It's a different issue. But up to 1/1/2021, GSTR 3B was not the only return. So only after that it became. And only by Finance Act 22, Section 38 was amended. So in my humble view, for the years 1718, 1819, 1920, the department cannot insist on the implementation of 16.4. They can't insist on the implementation of 16.4 for those 3 years, because they never had a mechanism for the filing of GSTR 2. GSTR 1 was there. GSTR 2 and 3 were never there. So the returns that you filed under GSTR 3B, 3B was only a memorandum. It was a manually input memorandum. So therefore, the GSTR 3B was not a return of your input tax credit. It was a return. Assuming it's a return, let us assume, give it to the department that it's a return. But that was only after 1/1/2020. Yeah, and even there, you give details of the input tax credit and a consolidated figure. And then the matching other things which started later. After the amendment to Finance Act, after the amendment to Rule 61 and 60 in 1/1/21, and the further amendments in 22, when 38 itself was recast, completely recast, to remove references to GSTR 2, 3 and other things. So my humble understanding of the law, subject of course to what the high courts will say, is that these 3 years you cannot insist on any assessee credit being beyond that period. In fact, somewhat similar to the arguments that I have taken in the petitions was one Madras High Court decision, Kevin Gas, where they said that you have not provided this GSTR2. They talked of only 1 year, 1718, in that decision, if I'm not mistaken. Kevin Gas, Madras High Court said, you have not provided this GSTR2 facility. So how can you insist on complying with 16.4, allow him to file it manually? I think that decision is correct. In fact, I would take it a step further. As I've said, for the 3 years, there can't be any restriction on input tax credit, even if it is taken beyond this the period which is envisaged in 16. This is a new thing which I thought which comes to me, which I thought I will share it in this forum. This is as far as input tax credit and related litigations are concerned. The oft-repeated topic of the JDS You saw news yesterday in the Supreme Court coming through the tax sutras, flash news as they. Nowadays, we have flash news, I thought, for politics, but we have flash news for GST also. Where flash news came, Supreme Court, while entertaining the petition against the Telangana High Court decision, however, asked the assessees to make payments, continue to make. This is the flash news. You have to read the order. Now, this developmental rights has become a very sticky issue after the Telangana High Court's decision in Prahita Constructions. A range of arguments have been taken by persons who argued it. I'm sorry to say that the reasonings given by the High Court don't seem to touch on all the issues. Nobody said that developmental rights is equal to sale of land. Nobody said that. I don't think anybody would have said it. Nobody is saying when you transfer developmental rights, it is equivalent to transfer of land. Nobody said that. What we are saying is simply this. Very simply, I will put it. Transfer of immovable property includes transfer of or sale of land, sale of development. Both these suffer stamp duty. Now, if you look at VKC Footsteps case, the Supreme Court specifically said stamp duty transactions are outside the purview of GST. So we are only saying this. Sale of immovable property, whether it is developmental rights or whether it is sale of land, dehouse what is there in Schedule 3, because Schedule 3 is included by way of abundant caution. Supposing I gift an immovable property, it doesn't come in Schedule 3. So will it be subjected to GST? No, because it's a gift. There is no consideration. It's an immovable property again. Immovable property transactions have deliberately been kept out of the GST regime. The sale and, once an immovable property comes into existence, you please see, I remember the opinion of, I think, the Advocate General in one of the foreign countries. He gave an opinion to the European Court of Justice. There he says, what is the reason for introduction of tax on works contract or construction services? The reason is you have value addition when you build something on land, maximum value addition takes place till the emergence of the immovable. Once the property emerges, the value addition therefrom is negligible. When I say value addition, it means value addition as a result of my operations on the property is negligible. Therefore, you should not have VAT after the property has emerged. Or you can give an option for VAT taxation. That is why in the European countries, you have an option in rental. Some commercial rentals will be taxed. Some of the residential rentals are not subjected to tax, or an option is given in some of the countries. This is because the value added tax value is added only up to the stage of construction. After that, there is no value add, or some negligible value add. The property price goes up like out of natural factors, not out of production factors. That is why VAT is not levied. Typically on sale of immovable property. Developmental rights is also the right. Once the owner transfers the developmental rights to X, after that, what happens? It is classified as an immovable property. Developmental rights itself is immovable. So this concept of the European Court of Justice and the opinion given by the Advocate General there, what is the reason? Unfortunately, I think may not have been argued or may not have got the attention of the high courts in India, because these concepts have evolved over 50 years in uh, foreign. I find it very strange when the government advocates come and tell, this play on the ego of the courts, saying, you should not look at foreign legislations. We are in India. We can manage. What is this? I can't understand this. You borrowed that law from Europe. You borrowed it from Australia. You borrowed it from Canada. If you borrowed it from all these countries, my dear friend, you have to follow even the laws from whatever is the decisions and law which amendments which have taken place there. These egoistic arguments playing to the gallery and ego of saying, no, you are an Indian judge, you know everything. Actually, to tell you the truth, we know nothing in that. The amount of literature that is there in European countries on just composite supply will put us all to shame if we read through it. We know nothing in that. Even the one who's now speaking to you hardly knows anything. So much of literature is there. Every time I read, I feel very humbled. I feel, my God, so much is there. I have not even thought of these things. But in our country, because of this split of lists between center and state, taxation of JDA, we should have been a little more careful. The Andhra Pradesh High Court, in my opinion, should have been a little more careful. One of the issues which we found moving from VAT and excise regime, service tax regime, to the GST was government contracts. There are any number of decisions now saying that the differential between GST and VAT and service tax should be reimbursed to the contractors. You have the Karnataka High Court decision in mass constructions, which I had the occasion to argue, and several other judgments of the Karnataka High Court which came saying the differential of works contract minus service tax or VAT should be reimbursed to the contractors. This Karnataka High Court decision, the Madras High Court decisions are also there on this, which can be followed, and in my opinion, this is on the this is allowed on the ground of fairness, because when the taxation rate was around 4% in states prior to coming into of GST, GST has pushed it. Initially, it pushed it around 12, and then it now has gone to 18. So to that extent, I find that the differential had to be paid. Otherwise, the contractors could not have done their work. So to that extent, the decision of the Karnataka High Court on mass construction and other decisions are good judgments and will have to be, in my opinion, followed across the country. We found the Bombay High Court giving a rather mixed judgment in Dharmendra Jani's case in 2023. We had a difference of opinion between two judges. One judge feeling that the intermediary services, the provisions are unconstitutional. Other judge saying that it is constitutional. Third judge saying it is export, but still you can't subject it to the intrastate, but you can subject it to CGST, I mean IGST, you can't subject it to CGST plus SGST. So it is constitutional, but it is export of services. So you had actually three opinions. Matters, of course, before the. If there is three opinions where two judges hold it is constitutional, others else says no, then the constitutional validity has been upheld. Therefore, as you see today, on the intermediary, constitutional validity has been upheld by the Bombay High Court. Matters is pending before the Supreme Court, but I would say that this matter has to be argued with a lot of care and caution. Reason being that there is no doubt in my mind that the opinion given by Justice Ujjal Bhuyan, who's now in the Supreme Court, saying that it is unconstitutional is correct. The reason you have put the intermediaries into one category just to deny them the benefit of zero rating. That in itself is a, we're not talking of the moralistic uh, view of the legislation. We are saying you're singling out a sector, you're singling them out. They're not different from those who are other exporters. How are they different from any consultant who earns money or any person who exports goods? They're also doing service, maybe in India, but they're earning also foreign exchange. Your criterion is that the services should be received outside India and the amount should come in precious foreign exchange. You can't, after having laid down that criteria, you cannot put a condition through the same, in legislation saying that the place of supply will be deemed to be in India. You have made it impossible for them. So this decision does, I think the Bombay High Court decision does require a review, does require to be set aside by the Supreme Court. Let us see how that happens. Because you see, there's two types of notices that are coming. One is the intermediary to deny you the export benefits. And second set of cases which I am saying is much, much, much more rampant. I'm sorry to say this. Across the country, we've got stay on most of these notices. The fact remains that we have had a huge amount of litigation where even if there are only two parties, one exporting to another, the department invokes invariably Section 13(8) and says it's an intermediate. Their own circular, which was issued long back in the service tax regime, said you have to have three parties. You've had a spate of judgments of the Delhi High Court, starting from Ernst and Young and so many other cases where they've said, no, no, no. This is not intermediary. This is very much exports. Spate of decisions of the Delhi. So I just hope that the second set of cases, department should stop booking these cases. We had an interesting line of judgments, which I had occasion to argue. And of course, there are others also who have argued in other places. That educational universities collect affiliation fees from colleges. Very interesting matter. We took a view, the Karnataka High Court took a view that the exemption that is there for educational institutions, the term educational institutions will include universities because without them affiliating colleges, education itself cannot be done. They took a broad view. I had argued before them that education itself is not subject matter of GST. You can have an exemption, but on first principles, education itself cannot be subject matter of GST. And all those notices in the GST has been stayed. The service tax, I argued the case finally. There is two reported judgments, Bangalore University's case and Rajiv Gandhi University of Health Sciences, where the service tax regime, I said, universities are part and parcel of educational institutions. You can't divest them. Karnataka High Court upheld that view. There's also in Gujarat, Sahitya Mudranalaya's case, where Gujarat High Court also takes the same. But it's not that the Madras High Court initially took the same view. But of late, I found one decision in the last 1 year, Pondicherry University's case, where the Madras High Court has taken in service tax a contrary, saying that you should read it strictly and universities are not included in that exemption. And if you take in GST regime, Telangana High Court has taken Care College of Nursing. They say that the universities don't fit into that exemption notification at all. So today you have two streams of judgment. The Karnataka High Court and the earlier Madras High Court decisions taking a view universities are not liable. The Telangana High Court and the later versions of the Madras High Court taking a different view. Delhi High Court taking a middle view in the National Board of Examination, which was latest case law, the NBE, where they said the NBE is not liable, but where the person is not a student of NBE for certain tests like screening and accreditation services, there they will be liable. So they have distinguished slightly. NBE is the latest decision of the Delhi High Court. So you have some amount of controversies there, which have to be settled in due course. Next controversy is we look at the secondment contracts. This has been after the Northern Operating Systems case of the Supreme Court in 2022. The Supreme Court took a view that if somebody is seconded from abroad to here, that is a manpower supply or recruitment services. It is not an employer contract. And therefore, since he retains his lien on the employment abroad, the debit note has to be subjected to service tax on reverse charges. You had a circular following, which I will come to later. Because of this Northern Operating Systems case of the Supreme Court, this was directly applied to all the secondment contracts in India in the GST regime. You have a spate of litigation there. We had to show the Karnataka High Court in the cases which I had argued, and you have cases elsewhere also in Delhi, I think Punjab and Haryana, where we showed the Karnataka, we had shown the High Court in Karnataka that employment contracts fall under Section 7(2). Read with Schedule 3. And the wordings are very wide. In the course of employment or in relation to employment, anything is out of the tax net. So if a person is seconded from abroad to here, there is nothing which stops a person from having two employment contracts. Is there anything which stops it? Northern Operating Systems did not envisage that a person can have two employment contracts. I can be employed in two companies. Is there a bar on that? That was never looked into by the Northern Operating Systems case. So we showed them that, and we also showed the Karnataka High Court that employment contracts are very wide. That I have a lien in the foreign country doesn't mean I'm not an employee here. I still maintain I can be an employee here. On that basis, further proceedings were stayed by the Karnataka High Court. They took a rather detailed interim orders were passed in Alstom Transport's case. United Breweries case, Baruka's case, and BC India's case. The last two were argued by me. Interim orders were fairly distinguishing Northern operating case. We had a good amount of an. And in December 23, the Central Board of Indirect Tax and Customs issues a circular on secondment contracts saying the Supreme Court has taken a very nuanced view. But when you apply it in GST, you should be very careful. You should examine the factual matrix and then come to a conclusion. It's virtually a circular which says, I don't know, you do what you want. Make sure you follow the Supreme Court judgment by trying to fit the facts here into the Supreme Court judgments. This is how I read the circular, because these circulars which are ambiguous cause more problems than if there was no circular. Fortunately, the high courts in the country have seen this and are subjecting it to tax. When it comes to gift vouchers, in Kalyan Jewelers case, the Madras High Court specifically held that gift vouchers are actionable claims. Probably they then, of course, issued a clarification on their judgment, I think, later to talk of Section 12. But fact of the matter is that I would think that before we decide whether a gift voucher, let us be very clear. A gift voucher which is given in my hands when I go to a shop. Let us assume a company gives me a gift voucher. I'm an employer. I'm not even an employee. Just I get a gift voucher. I have to go and uh, give it to Amazon. Let's be clear on what a gift voucher is. A gift voucher is nothing but an alternate payment settlement mechanism. Supreme Court said it so in Sodexo Pass case. So gift voucher is nothing but a payment alternate to currency. You have currency which is recognized by the Reserve Bank of India, and the payment and settlement rules also recognize alternate mechanisms of settlement of payments, akin to a consideration, cash consideration. So a voucher is nothing but that. Now, when you can't tax a voucher per se. The underlying supply in the voucher will be taxed, and that is what Section 12 and other sections say. It is the underlying supply in the voucher which is to be taxed. If you don't have an underlying supply, you don't know when that time of that supply takes place, then only you tax the voucher when you issue it. Otherwise, the underlying supply only is taxed. Therefore, per se, the decision in Kalyan Jewelers, whether it's actionable claim or not, it's a different question. But the voucher in itself cannot be subjected to GST. That decision is correct. The corporate guarantees. Fortunately, in this service tax regime, we had the Edelweiss Financial Services case, which came in 2023. Supreme Court said this. When a corporate guarantee is given to a subsidiary by a holding company, there is no consideration which flows. And therefore, if it is given to group companies, every holding company a holding company is so because it has reached that status. It has a standing. Now, when it floats a subsidiary, subsidiary goes by itself and asks for a bank loan, let us say. The bank will say, no, who are you? And then they'll say, no, we are a subsidiary of so-and-so. So they'll say, okay, fine. If you're a subsidiary of so-and-so, then prove it by getting us a corporate guarantee from the disburse loans. Because we don't know who you are. Or a track record is not. I'd put it, that is a better. So the holding company gives a corporate guarantee. Edelweiss's case, well argued. The Supreme Court clearly said there is no consideration flowing here, man. There is no question of taxes coming in, service tax. Now you have a circular being issued and saying that it is transactions between related persons. It will come under Schedule 1. I will fix a value for it at 1% and continue to tax you. Now, this, in my opinion, is completely wrong. You can't impute a value when nothing is charged. You don't even have the rules specifically. And now you introduce rules. Are they in? Can you say it is in accordance with Section 15 of the Act? Keeping this in mind, the Delhi High Court in Sterlite Power Transmission did give a stay. And in the sense, they said no course of action should be taken. The Punjab and Haryana High Court in Acme Clean Tech actually gave a stay. And that's right. Big consideration means, first of all, it should be quantifiable in money terms. You should either have an actual transaction backed by money, or you should be able to quantify it in money terms. There is a range of facilities that group companies have. You can't quantify it in money terms. So fixing ad hoc values to them, in my opinion, is arbitrary, discriminatory, and against commercial transactions in the normal course of business. So in my opinion, this fixation of arbitrary values may have to be challenged. Madras High Court considered the hostel accommodation, whether private ladies' hostels, will you subject them to GST? Our GST authorities would say, no, no, no. See, there is, in this property, they have constructed 40 or 50 rooms and they're letting it out. It's like a hotel. It's like a guest house, hotel. There's no difference between a lodge and private ladies' hostels. It is not a residential dwelling. And that is where the Madras High Court beautifully dealt with this aspect and said it is a residential dwelling used as a residence, because what do the ladies do in the hostel but stay there for study? It's a residential dwelling for them. When they go away from their homes, it's another home for them. I don't know why the tax authorities would go to this extent to tax people. But I'm not saying the Indian tax authorities are like this. Even foreign, you have had case laws. Tolsma's case, for example, the European Court of Justice. What was that case? It was a case where a person on the road singing would get some money from those who passed by. You have in foreign countries this, but here also you have people performing all sorts of, risky arts in the street. Some people will give them money, some people will not. Tax authorities are the same across the world. In Tolsma's case, the tax authorities wanted to put VAT on him. Why? They said, you are getting consideration, it is liable to VAT. European Court of Justice said, unless there is an enforceable obligation, there is no GST, no VAT. Just because somebody gives some money, the person who sings or who performs on the street cannot enforce payment. X person will give him 10 rupees, Y person may not give him, Z may give him 100, but he cannot enforce it. So even in the Indian law, please understand, if the consideration is not enforceable, There is no GST. This concept will apply even for corporate guarantees. It is not enforceable. Nothing is charged as a matter of fact. One of the other lines of decisions in indirect taxes, which what is a governmental authority and how are those exemption notifications to be read? You would have seen the decision of the Supreme Court in Sharpunji Palanji's case, where this clauses spoke of governmental authorities set up under an act or having 90% of overall control. Department would say that this 90% criteria will apply for all governmental authorities. The Supreme Court said no. It is separated, two clauses. If you're set up under legislation, you're automatically a governmental authority. For example, university set up under legislation, governmental. The 90% equity participation in respect of other which are entrusted with functions of municipality or panchayat. So the Sharpunji Palanji decision of the Supreme Court is a good decision. It clarifies what is a governmental authority clearly. But we have to be careful because now we have each one of those terms being defined in the GST law. For example, local authority is defined in the GST law. Because of that definition of local authority in the GST law, Gujarat High Court in Nepra Resources held that the WAPI notified area authority in WAPI is neither a local authority nor a governmental authority. And the exemption was denied. A very detailed order of Gujarat. So when you are rendering services to the central government, state government, governmental authority, or governmental entity, you please see if it fits into the definition before the exemption is given. We should very carefully look at those definitions, carefully look at the provisions of 243, either Q or P or W, Schedule 12 carefully before you come to a conclusion. And Nepra Resources of Gujarat High Court throws light on how you would interpret that entry. It's a very important case law for governmental contracts. One of the other important decisions of the Bombay High Court, of course, is the Agarwal Coal Corporation's case. Agarwal Coal Corporation case was whether IGST is payable under reverse charge mechanism on ocean freight on FOB contracts. Very interesting decision. See, the department was always under the impression in CIF contracts, ocean freight payments are included already in the cost of goods. Therefore, the question of payment reverse charge doesn't arise in CIF, but FOB it will arise. This was the department's understanding. Very, very nicely, the Bombay High Court said that once that reverse charge notification entries are struck down, if they're struck down for all purposes, not just CIF, even for FOB, they struck. Very well put. In law, that decision is absolutely right. Then we come to 2023 Gamescraft decision of the Karnataka High Court, a landmark decision running to 300 pages and all, which said that online gaming, which is a game of skill, cannot be subjected to tax. Games of skill can't be subjected to tax. And struck down the show cause notice. Strangely, this is a single judge decision. Instead of taking it to the division bench, they filed an SLP directly in the Supreme Court. And had it stayed, it was a very extraordinary course of action taken by the government. I don't know if the assessees would be afforded the same opportunity. But it appears that all this, the government suddenly became wise and introduced several amendments to the Schedule 3 and brought in rules, brought in definitions of what is online gaming, etc., and to try to tax them and bring them to a tax net. They brought a whole lot of amendments have been brought about from with effect from 1/10/2023, which means effectively the government has said, in my humble opinion, effectively they've said we can enforce this demand only from 1/10/2023. You can't do it retrospectively. By introducing it on 1/10/2023, in my opinion, Gamescraft Technologies case will have the appeal or the special leave petition which has been filed in the Supreme Court has to actually be dismissed. On the simple ground that the government itself has introduced statutory provisions only on 1/10/2023. On just that limited ground, it should go, keeping in mind the principles laid down by the Supreme Court in 2015 in Vatika Township's case. You can't do this retrospectively. We come to a very important concept which will be of some we are going to have a lot of litigation in GST on this. In Delhi International Airport's case, the service tax regime, the Supreme Court took a view that the user development fee is a statutory levy. Statutory levies for doing a statutory duty cannot be equated with services rendered for consideration. Bombay High Court had done that in MIDC's case. The Supreme Court in Delhi International Airport's case beautifully said user development fee has nothing to do with the services rendered to the passengers. It is there. It's a tax or a cess. Being a tax or a cess, you can't have a tax on it over and above that. Will this apply to GST? Now, what the government authorities, the tax authorities think is, we have inserted a clause in the definition of business which says public authorities of central or state will be liable to tax because it's a business. The definition of business in 2(17) of the CGST Act includes services or goods supplied by public authorities of the center or state. So this aspect, what is the meaning of this, will have to be gone into in the GST regime. Whether automatically because of the definition of business, they will be subject to tax. And what is the meaning of what public authorities will have to be gone into? In my humble view, the Delhi International Airport's case, the ratio will still apply because Section 7 doesn't apply. Forget 2(17), Section 7, that there is a supply of goods or services for a consideration. That doesn't apply. Maybe in the course of business, but there is no consideration. It's a statutory law. So in my view, this decision, Delhi International Airport, should still work. Then I think I have some more time left. I will continue for some more time. I hope I have another 10, 15, 20 minutes left. Or 10,
Yes,
15
sir.
minutes.
10
Yes.
minutes, sir.
10 minutes, yeah. 10 minutes. Now look at, you have, as I told you the beginning of this session, show cause notices being issued indiscriminately. I told you that I have myself filed petitions, where cases, where all the three authorities have issued show cause notice. So what is the validity of these show cause notices? Fortunately, we found the Madras High Court taking a view that if you have, you know, multiple show cause notices being issued, simultaneously, they are not valid. So, in Al Madina's case, the Madras High Court held that because of the provisions of Section 62B, you cannot have simultaneous proceedings. And they're right. They're right. But what the Madras High Court did, which unfortunately undid this whole thing, however, was that they gave liberty to the authorities to reissue the notice. To the extent the notices are not reissued, well and good, the people will escape. Otherwise, no. Who is a proper officer was considered in Fomento resorts by the Mumbai High Court. Rather surprising decision, in my opinion, where the bench said that Canon India principles will not apply. What applies in customs law, Canon India's decision will not apply to the challenge to these circulars. In other words, what they said is that the proper officer concept that is there has been well taken care of in GST. I think the Bombay High Court, with deep respect, may not be correct. Even in the GST regime, 73, 74 notices can be issued only by the proper officer. There is no multiple proper officers. If you vest multiple authorities with power, doesn't mean that the show cause notices can be issued by all of them. So, to that extent, I believe the Bombay High Court judgment in Fomento resorts will have to be rethought of. And the true ratio in Canon India has not been discussed in most of the decisions. The true ratio in Canon India is this. If you have multiple people issuing show cause notices, the Supreme Court uses these words. There will be chaos in administration. And therefore, it will be violative of Article 14. That is the true ratio. Fortunately, not noticed by most of the high courts. Another rather interesting decision which I felt was not correct, in my view, is this usage of, our 168A extensions. To issue the show cause notices, see, I can understand you had COVID in 2020. So you made that extension or whatever it is till 2021, 22, fine. 23 and 24, which COVID is there for you to keep extending under Section 168A? No, all these notices have been challenged across the countries. But I found a very strange decision of the Kerala High Court just a few days back in Faisal Trades or Traders, where they say it is a policy decision the government has taken. Immediately when COVID came, they extended the period. This is, how many extensions they can do is at the executive discretion. Very unfortunate. Very unfortunate. Kerala High Court said the notifications are not ultra virus. They are quite they're in order. No problem. First extension was given, fine. Then they kept extending it because we don't know what is the extent of the pandemic. How much I am fine. Will this same thing be then extended to our refund claims? Can we now in 2024 say we are filing refund claims for 2017 because the pandemic should have been extended to us also? I don't think the decision of the Kerala High Court is correct. But nevertheless, there is one decision which is against us. DRC 1A. This has been a favorite subject for me. Whether it is optional or mandatory. Now, you had a spate of decisions where the high courts took a view that DRC 1A is mandatory. You have to issue the 1A and consider the reply, then only the show cause notice can be issued. So, in Rule 142, they changed the DRC 1A, which said shall, was changed to may. Then, you had a set of decisions of the Andhra Pradesh High Court saying that once it is changed to may, then there is nothing, becomes optional. New Morning Star Travels, Andhra Pradesh High Court said this. Gujarat High Court gives a very interesting interpretation in Agrometals case. Way back in, they said this. Way back in 22, they said this. The DRC 1A is issued for the purpose of operating 73(5), to give the person an option whether he wants to pay the money and settle it so that no show cause notice will be issued. So, changing the shall to may, in my opinion, there is no difference. It is mandatory for you to give an option to the assessee whether he wants to pay and settle the amount so that there is no further penalty or no show cause notice issued. Or under 74, he gets away with lesser amount of penalties. That is the reason why 142 and A. One capital A, read with the DRC 1A was done. That's a very interesting decision of the Gujarat High Court, which will be of some interest to us. There are decisions of the Madras High Court and the Patna High Court, which are at loggerheads with each other on whether when you put cash into the electronic credit ledger, can you say whether it is paid? Eicher Motors, Madras High Court says once you put the cash into the electronic credit ledger, yes, it is paid. Patna High Court, on the other hand, would say no, it's not paid. I think that is Syncon Infrastructure decision. Says once you put it in electronic cash ledger, my dear friends, till it is appropriated, there is no payment. This is what the Patna High Court says. But in my opinion, this is this. If I put it into the electronic credit ledger, can I take it out at will? I can't take it out at will. I still have to make a refund claim to take it out. If that be the case, that money is sitting with the government. Therefore, the ratio of the Madras High Court decision to me seems to be correct. That there will be no interest liability because the money has been put into the electronic credit ledger. I have not put it into my ledger so that I can use it at will. For anything which I put into the electronic credit ledger, if I want to transfer it, if I want to say, let us say I want a refund, I have to go to the department again. So I've covered about maybe 40, 50% or 60% of the decisions which I would have probably come prepared with. But I think our session is coming to a close. And I thank the BCA for giving me an opportunity. Some of the decisions have been covered, some are left out. We will probably see it in some once another 6 months pass, we will have another 100 decisions coming, which will be so important. Thank you so much.
Thank you very much, Raghuraman sir. I don't think we have much time for the questions, but there are few questions which are there on the chat box. So I'll just take only two questions
Yes.
for the benefit of all. So the first question is on there is in the builders, in the case of builders and developers, unless and until 80% of the purchases are from the registered person, there is a reverse charge liability. So the one of the audience wants to know that there are lots of labor unorganized labor who are employed in for the purpose of these construction contracts, whether this would be considered as a supply from unregistered to registered, or it would be considered as a contract of service as
My
far as the employment.
in my opinion, these kind of conditions could not have even been put into the notifications. They can't make it unworkable. There is all of this is most of the people are unregistered in this country actually, or they're under some composition scheme or something, because they're small people. You can't put these conditions in the notification. I don't see any problem in these people going ahead with their scheme of building without all these reverse charge mechanisms coming into being. I think these have to be challenged surely because small developers will not be able to comply with these conditions. It's impossible for them.
Yeah.
The doctrine of
Another-
impossibility will have to be invoked because there's no way they can go out to a registered person and take from him.
yeah, yeah. So the very first issue that you touched upon was ITC, in which one of the sub issue was this GSTR 2A versus purchase register 3B ITC mismatch. So one of the audiences asked that the new law has been amended and incorporating section 16 to AA, requiring
Yes,
the
yes.
supplier to upload.
Yes,
So
yes,
would
I've
it have
got
any
it. You
implications
see,
on-
in my view, they saw the rule and then amended the act. In my view, unless they can prove that there is a nexus between these two people in evasion of tax, in my view, the credit has to be allowed. 16(2)AA and 16(2)C cannot be brought into effect in such a manner as to annul genuine credits. And you have any number of case laws in the earlier regime in VAT. You have the Delhi High Court saying this, the Madras High Court also saying it. Yes, sir.
Yeah. One last question. We always say Dil Mange More. So one last question about the binding precedent. So we have one audience from Guwahati. He's asking that in his the department is only accepting if it is Supreme Court judgment or Guwahati High Court judgment. All other high courts they are not accepting. So what is
No, they
the
can't do that.
binding?
See, the law is very clear. If you look at Kusumin God's case, Supreme Court, if you look at Godavari Devi Saraf's case, in fact, I will tell you an interesting incident which happened. I'll not name the justice, just in Bombay High Court, this happened. When I was sitting there, the justice called me out and said, you see, if I if I pass a judgment in Bombay, will it not be binding on the rest of the country? How can we take a different view? Others take a different view. He asked me, I said, you're absolutely right. The High Court judgments, because this is a uniform tax law across the country as stated by the government, I'm not stating it. So uniform tax law, which has been throughout the country, unless there is a contrary judgment, please note this, unless there is a contrary judgment of an High Court, of the jurisdictional High Court, other High Court judgments will be binding on tax authorities across the country. You see the decision which I'm telling you, I think it's in 113 ITR. This Godavari Devi Saraf's case. And see the ratio of the decision in Kusumin God's case, Supreme Court. You may say that you may agree or not agree, but in my opinion, if there is no contrary decisions of the jurisdictional High Court, all those High Court decisions, especially with the strike down, are applicable. For example, I had this 89(4)C struck down in Karnataka High Court. That decision will be binding across the country.
Yes, sir. So I think that's it for the question answers. Now, before moving to the very pleasant task of honoring you with a vote of thanks, one announcement: we have our 18th GST residential study course on 6th to 9th of June 2024 at Visakhapatnam. It's a very full-fledged course for all the people who wants to excel in the GST as a subject. And I'm very proud to say that sir has been been a paper writer in most of our GST RRC course. This is the 18th. The sir had first come, Raghuraman sir had first come on in our third indirect tax RRC, And from thereafter, at least in four RRCs, you have been our esteemed panelist. So I request all of you to just have a look at that course details on the website and enroll, because the thrust of this particular course is more on the practical aspects, and the design of the course is very well articulated. So with this, I am very thankful to Raghuraman sir for taking us through this 75 minutes very exciting session, enlightening us with your precise thoughts. I started noting down, since I had to give you the vote of thanks. I started noting down the number of issues and number of judgments that you whenever initially you started, but after filling 3 pages of my note sheet, I stopped. So I am easily, I can say with confidence that you have at least scored more than 60 judgments in these whatever 75 minutes you deliberated, and more than 20 issues you have touched upon, right? Since input tax credit to the last corporate guarantee, etc. So I thank you a lot for being with us. For whenever we call you, you readily agree upon for acting as a panelist and share your thought process and share your views frankly on this particular forum. Thank you very much, sir.
Thank you.
Thanks so
you.
much.
I request all of you to, I know it's a virtual platform, but I request all of you to carry a loud applause.
Thank you very much. Thank you.
Thank you, Raghuraman sir. Thank you.
Thank you so much. Thank you, Sunil ji.